Good afternoon. This is Tony Cherniawski, manager of the Practical Investor, LLC. Today is November the 19th, 2009, and the topic for the day is there's a bear flag in bonds. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment you may consider. You cannot directly invest in an index. Well, hello again, and this is the second of a three-part series that I hope to get accomplished by the end of the day. I want to discuss bonds at this point and give you my view of what I'm seeing in the market at this time. So let's go right to the bond market. The first thing I want to do is I want to start with the 3-month Treasury bill rate. I explained that in the earlier video. This looks ominous to me. What we're looking at is the Treasury bill rate has now dropped below the rate that had fallen to at the time of the Lehman Brothers collapse back in September of 2008. The Treasury bill rate had gone lower back through the month of December of last year. So the Treasury T-bill rate could go down even more. But what we were seeing then was an extreme move to safety. People were literally paying Ben Bernanke, if you will, to hold on to their money for safekeeping. This is what Treasury bills are. This is the safest money around. And so to have a negative rate or near zero rate is really outstanding. So this speaks volumes about where the risk view of the risk is in the marketplace by professionals right now. So having said that, kind of laying the foundation here, let's take a look at bonds. Lo and behold, we have what's known as a bear flag in bonds. Not only that, we've got a 2-for-1 formation here because we also have a head and shoulders pattern forming. Very, very interesting. And it's quite shapely in form. I want to say that. If you can say something on a chart is shapely, this is it, okay, folks? So having stuck my foot in my mouth, let me just proceed to say that a bear flag is unique because if you expect to see the stock market go down, if there is a possibility that the stock market is going down, you would see a rally in bonds. And in fact, we're seeing what may end up being a failed rally. Look at the stochastics. Look at the RSI. We're topped out here pretty close. Within a few days, I would say bonds will probably roll over. So having, examined this part of it right now, we're in a unique situation where not only is there danger in stocks, but potentially there's danger in bonds. And that head and shoulders pattern tells us that if it slips below 118, we could go to the bottom of the chart. In fact, we will surpass the June low in bonds if once the bond market, 30-year Treasury, goes below 118 on its index. So I want to be real clear here that bonds are not, long bonds especially, may not be a safe haven for investors who want to find something to put their money into. Quite literally, you're going to have to pay to have it kept safe, as it were. So I just want to make that real clear that we've got a situation on our hands here where literally the normal running place that people would go, which is bonds, when the stock market starts to sell off, could be a very dangerous trap. So let's just leave it at that right now. Again, you have a 2-for-1 combination here. I could go out on the the cable channels and start selling stuff here. 2-for-1, not just one, but two for the price of one right here. You have a bear flag, which has already violated the bottom. We've got a little bit of a re-entry here, but that's the right shoulder. And then you have a head and shoulders pattern and an overbought market at that. So please understand that there's a risk in bonds that normally would not be anticipated in a situation where the other markets might be selling off. So please take due care. For those of you, I am offering a special right now. $50 will get you as a subscriber on my daily newsletter through the middle of January. You might want to take advantage of that. This is a very interesting time right now, and my subscribers have already been well prepared for what might be coming here. So just either you can do that or visit my website at thepracticalinvestor.com. My own personal email is tonyc@thepracticalinvestor.com. So let's get in touch here. I will be willing to send you a free newsletter and as a sample. And for those of you that want to participate, $50 will get you to almost 2 months of subscription service, and we'll take it from there. So I hope you have a great holiday season. I'm looking forward to enjoying my Thanksgiving with the family, and I hope you do too. And please do the right thing. Thanks very much.